It is the eve of the Bitcoin halving month. As we all know, we have been highly anticipating this event. If you are into crypto, we all know about the Bitcoin halving, which is estimated to be somewhere around the 19th of April at this stage. And not only that, April is usually one of the highest performing months for Bitcoin as well. So in this video, I'm going to break down the current price action for Bitcoin, get you ready to go into the new trading week, and we're going to have a look at all the liquidity that is available, where the heat map orders are currently placed, and where we're currently sitting in the model. So if you're new here, welcome. If you're returning, welcome back. As I get into the charts, be sure to smash that like button and hit subscribe if you're not already subscribed. Now, before I get into the current Bitcoin price action, I just wanted to take a moment to go over the past cycles leading up to the halving event to have a look at what happened in the month prior to the Bitcoin halvings previously, to see if there's anything that will help us to draw an expectation from now. And so I'm all the way back in 2012 here. We can see in this one, we did have a pre-halving dump of around about 28% right here. That happened just under 2 months before the halving. And after that, it was really just up only from there. In this particular cycle, we did not have a post-halving dump as well. And another thing I want to measure is from the halving, how long until we saw the peak of the bull market that followed. And in this particular cycle here, we can see that it was 367 days. Moving on to 2016, we also had a pre-halving dump of around 28%, and that happened within 21 days of the halving. This one also had a post-halving dump as well, 24 days after the halving, and that was about another 27-28%. From there, the halving to the next cycle top was 526 days. Now, the 2020 cycle is a bit difficult because we all know that this very large dump here, which was a 62%er, that was because of COVID. So I wouldn't really count this as a pre-halving dump because we know that it was an unforeseen event and all markets were affected when this happened. And then following that, we didn't really have another pullback into the halving until literally the week of. And that one was about an 18% pullback right there. Now, I'm on the daily chart, so this was within a few days right before the halving, but it still maintained the trend. And then following that, the next cycle peaked out at 549 days. So if we take a round number at about 550 days, which we saw in the last two cycles, after the halving, which is going to be around 19th of April this time, then that means that the cycle should top out this time at around mid to end October 2025. However, we can't forget that first cycle that was only 367 days. And so if that were to repeat, that would put the cycle top in April 2025. Now, let me tell you why I had a look at this. The reason is a lot of people are wondering what to do, whether it's time to sell, to take profit, all that kind of stuff. It's pre-halving. We don't know if we're going to have another pre-halving dump or has it already happened. I'm going to go into detail about that on this video. We have had one pullback already, which was about the 18%. However, the moral of the story is if we do dump into the halving at this point in time, we know what the post-halving price action looks like. So I wouldn't be really all that worried about it. My goal now is to think that we've got a year left of the bull market post-halving, and so I want to maximize my gains in that year as much as possible. If the price starts to pull back, if we have a heavy sell-off into the halving, if we just go sideways and then have it after, no matter what happens around the next 2 months even, any pullbacks are going to be buying opportunities for me where I'm mostly focused on getting spot positions, not trading leverage, waiting out this period of time and trying to get the best buys possible because I know what the next year should look like after that. So with that in mind, I'm currently looking into some more AI tokens, selling out of some and buying into new ones. If you would like a video on that, be sure to comment down below and I can do that for you this week. But for this video, let's get into Bitcoin and where we are currently in the cycle. On the daily time frame, I've shown this chart many times as we're still waiting for them all to play out. So we can see our rise 1 here, our rise 2, and we are still, in my opinion, we're still in the process of completing the rise 3. I don't really have a reason to believe that this is an M formation yet. I can clearly see the 2 rises within the 3rd push, and I really do think that there should be another one to come. And it may be that we rally into the halving and then we get a pullback. I'm not 100% sure, but looking at the price action right now, it just doesn't look like it should be over to me just yet. And I'm going to add onto this our heat maps. And I'm going to look at the 3-month period because I'm on the daily time frame. I just want to see what liquidity is there for us above price to see if this makes sense. I'm still looking at the same zone. On last Sunday's update, I told you about this 74 to 76K region, this light yellow region right here. And it's still there. It still makes sense to me that they will come for this, even up to around the 1618 into this liquidity zone right here. It's possible that, we do hit somewhere close to 80K, providing we don't start to break down below EMAs on the daily time frame. So right now we are holding above all EMAs, which is bullish. I do see some, wicks to the upside of the daily candles. However, as long as we're holding above all of those EMAs on the daily, I'm not really looking to open any short positions unless something on a lower time frame shows me that I should. But looking at this right now, it really is looking like to me that the level 3 is yet to come and might push us up into that high 70 region. Now, this was something on the 4-hour time frame that we needed to be aware of. We've had this going for a while where we identified this rising channel, which is a bearish channel. It was a fair few weeks ago now, and we did break down out of the channel, and there was a possibility for us to come back for a retracement before further downside. So if we have a look at where price is now, it's hanging around the 78.6. Now, that can be a reversal zones, but at the same time, I would never trade blindly off the 78.6. What I can see is that we've had this uptrend. We've broken back above the 50 EMA. We're holding it in a consolidation. So I would like to think that this has played out. This retail pattern has played out. And what we're in right now is a 4-hour time frame W rise 1, with this right here being the consolidation before we break out to the upside. So on Bitcoin, I do like that we're above the EMAs still, especially the 200 here, and that the 200 held as support and also gave us the W formation. I do like that we're above the 50 EMA. Currently, I can't really judge the price action because it's the weekend, so I'm not expecting a lot of volume anyway. But this does look like it is a consolidation after a rise. Once we're free of the false move week beginning, that this hopefully will continue to the upside. So speaking of false move week beginning, let's go have a look at the 1-hour time frame to find our weekend trap. So when we have a look at the 1-hour time frame, you can see here that price has held above the high of the week for the whole week. And I spoke about the significance of all of these levels in my video prior to this one. So if you want to understand how these levels work, check out the video before this one. I will link it somewhere above to make it easier for you to find. But so far, we're holding above that. We're holding above the 1-hour 200 EMA. Now, actually, I want to take you back to the last time I showed you how this formation was playing out so that we can see where we are now. So in the last, I believe it would have been last Sunday's update, we identified this formation here and that this was rise 1. And we talked about this being a retracement that was deeper than what we like it to be, but it was still valid because this retracement where it bottomed out was still a higher low in comparison to the peak of the W, or if you consider this low as well, you would also call it an inverse head and shoulders, which an inverse head and shoulders, the head and the right side is just W anyway. So you have that rise, retrace, still valid. We expected a further rise, which was what we got here. Then we had this board meeting, and then this would be our 3rd rise here. So then you might be asking yourself, okay, if we've had 3 rises, are we going to reverse? And you have very good reason to ask that because that's how the model should play out. But this is where the model gets quite advanced and where you really need to learn it in detail in a fully structured course. It's very difficult to learn this entire method just off YouTube alone. But I'll give you a little bit of a hint of how this works. And if you are wanting to learn this method in detail, like if the trades on this channel have been playing out for you, it may be worth investing in the education. So if that's something you want to consider, there is a link in the description of this video to come and join one of our memberships, which not only give you access to all of our education, but it also gives you access to our updates, our community, and all of our trading indicators. So let me explain the potential reset. Number one, what we want to identify is who is trapped. So what traders would be trapped above or below the current range? And when we look above the current range, we can really only see this wick right here because price has not ever returned to it. When we look below the current price, we pretty much have everything that is below the high of the week. So we're essentially just in a sideways range, and we are creating higher lows, but we're also creating lower highs. So we need the help of liquidation heat maps to know now where most of the liquidity is residing. And for this, I'm going to use the 7-day period because I need to cover the weekend, and I also want to cover as much of this consolidation as possible. So now when I look at this, what I can see immediately is that within this consolidation period here, there isn't a bunch of liquidity. So what that tells me is that in order for the market makers to build their positions, they're going to have to make a big move soon. And the big move is going to have to come up into these yellow zones here in order for them to fill their positions, or it's going to have to come down into these yellow zones right here. Now, that upper level could take us anywhere from, say, 71.5 to probably about 73K. And this lower level down here is at about 68.5 to about 68K. So again, I'm not able to draw a clear conclusion just yet. So I'm going to try and use one more tool to help me. And that, of course, is going to be the current heat map so I can see where all of the current limit orders are. Now, guys, as I'm doing this video, I want you to hopefully understand that I'm looking at all of this stuff for the first time as I film it with you. And I do that on purpose. I don't pre-prepare charts and then just call out levels to you. The reason that I actually do this, I'm seeing these charts for the first time as I'm filming, and I do that because I want you to start to understand the thought process and how I'm trying to draw a conclusion based on the data that I'm given. And I just feel like that is a much better way to learn, to understand what a trader is thinking about when they see things on the chart, rather than me just jumping on here and saying, oh, Bitcoin's going to 68K, buy there, okay, like, subscribe, goodbye. So if you actually like to understand this in-depth understanding of what's happening with price, be sure to smash that like button if you haven't already. But I personally prefer to go through like live with you, seeing it for the first time, so that any conclusion I draw is a natural conclusion. So as I'm looking at this, there really is nothing here to give me a hint of anything. I can see this 175 up here at 72,000. So here's another one I've got at 195, which is at 71,375. And I've got a lot of people wanting to buy the dip down below as well, all the way down to 67K. But the biggest cluster seems to be here at around the 68,000. So now if I take that back to my chart, I can see that that's this cluster here. So if we had false move week beginning to the downside to come for this here, that may be where that false move finishes at around the 68K region. If that happens, it will be taking this out, and then you would look for a W formation from there at the session changeovers. And if you happen to get one, that would be a signal of a trend change. At this point, it doesn't look even close to happening. So I'm not saying that we're going to go to 68 then up. We may not, but keep an eye on price action. And if you happen to get a sharp move down into 68K region, know that they're collecting this liquidity and that we do have heat map buy orders there at this point in time. And so if the structure then changes after it hits that level, that could be a good buying opportunity. We also need to have a look at what events we have going on this week. We're going to keep an eye on this one, especially for potential midweek reversal this week. If we get free of that, then we'll assess at the time. And that means that for now, we're pretty much free to just trade Bitcoin as it is. Now, I'm going to go down to the 15-minute to see if we can get a hint of anything a little bit more obvious there. Okay, so on the 15-minute time frame, this is our weekend trap. This little gray area here is the settle price. So the last 15-minute candle of New York on Friday, that is usually what forms the gap. So if that is where the price closed, then us remaining above that for the entire weekend so far means that there will be a gap when the CMEs open. And usually at some point in the following week, we come back to close that gap. However, you don't bank on that. You just know if price does happen to come back down into this area where that Friday candle closed, you would be looking for bounces in that zone as well to see, if that's it. Was that the goal of the market maker, just to close the gap? And then now we're moving on into a trend. If so, it can present a really good trade opportunity. Besides that, I don't see any kind of false moves that have happened already. So we still have a few hours before the markets open. They open at 5 p.m. New York. So it may just not have happened yet. It may also not need to happen. And the reason that I say that is because look at our open interest down here. So you can see the open interest rising, and that means we're getting the commitment of trade. So false moved week beginning only needs to happen if there isn't a commitment of retail traders. And so far we're getting that. We have no shortage of retail commitment here that we can see in this open interest. So this one may need some more time. It may be too early to try and identify a false move right now. Know the liquidity zones that we have above price and what we have below price. Instead of trying to trade out of this weekend trap, you might be better off just letting price hit that level and see how it reacts, or let it hit this level, see how it reacts, and open your trades from then on. And if you're wanting to know what we're going to be doing when we pull the trigger on our trades, it's best to join our Discord. Like I mentioned earlier, you can do that with a membership if you want full access to get all of our trading updates. Or if you just want our limited updates, then you can also consider joining the free section of our Discord, and you can do that with an exchange link listed down below. All of those links to all of the exchanges down below get you a 20 to 25% trading fee discount for life. Now let's take a quick look at ETH BTC, because this is the one we've been wanting to turn around, because if ETH BTC turns around, then that means that your Ethereum will fly as well. We've identified this weekly vector. Price hasn't returned to it since the last time we talked about it. If I go down to the daily time frame, we also had a daily vector right here, which price has returned to and created a lower low. So not fantastic, but that lower low could be the first side of a W formation. So I would still be watching to see how this daily closes. If it closes bullish, then let it move out of this zone and then come back to create a higher low, and then that's where you would be more confident that you do actually have a W formation on ETH BTC. And then that will also mean it didn't fully recover this vector right here. And what it's done instead is hold 50% of that vector, which could be this here, the first sign, if it turns out to be a W. So far, it's a possibility that this will turn around. Now, there's still 12 hours of this daily candle right here. So this could close at as any type of candle in 12 hours. But if it closes a bullish type of candle, then look for it to next move out of the zone and then hopefully come back to give you that higher low. And then we will end up with more confidence in ETH if it can do that. It's not there yet, but it's definitely worth keeping an eye on this. Being the daily time frame, it will take a while to get there, but it's worth keeping an eye, because once that turns around, then we know ETH is going to fly, and that's what we've all been waiting for.